Over 40% of fixed-income families in parts of Ohio are now spending more than half of what they earn just to stay in their homes. That number should stop you cold, because this isn't just about rising prices. It's about a silent shift happening in 2026 that most people don't fully see yet. Taxes are changing, costs are climbing, and for many families, income is standing still. So what happens when the math no longer works? Behind the scenes, a hidden system of tax adjustments, property revaluations, and reduced relief programs is quietly tightening the pressure. It doesn't hit all at once. It creeps in. A few $100s more in property tax, higher utility bills, fewer tax breaks, and suddenly, people who planned carefully for retirement feel blindsided. Have you ever felt like your money just doesn't stretch as far anymore? This is where the real story begins. Because families are now facing a tough, emotional choice. Stay and struggle, or leave everything familiar behind. And what you're about to hear might change how you prepare for your own future. Number 10. Rising property tax burden. What looks like a small yearly update is actually a powerful financial shift happening beneath the surface. In Ohio, property values are being reassessed more aggressively in 2026. When your home value goes up on paper, your tax bill follows, even if your income does not. This creates a dangerous mismatch between what you own and what you can afford to keep. For families on fixed income, this is not just a number on a bill. It is a slow pressure that builds every single year. Here is the hidden mechanism most people miss. Local governments rely heavily on property taxes to fund schools, roads, and services. When costs rise, they don't always raise tax rates directly. Instead, they adjust property values upward, which quietly increases what you owe. It feels indirect, but the impact is real. Research shows housing costs can suddenly take up 30% to 40% more of a fixed income after reassessment cycles. That means less money for food, healthcare, and daily living. And the system keeps moving, whether you notice it or not. So what can you actually do right now? First, check your property assessment carefully. Do not assume it is correct. If it feels too high, file an appeal with your county office. This step alone can reduce your bill significantly. Next, apply for programs like the homestead exemption, which lowers the taxable value of your home if you qualify. Finally, set a yearly reminder to review your tax statement. Because in this system, the people who pay attention early are the ones who stay in control. Number 9. Inflation outpacing fixed income. There is a quiet imbalance growing stronger in 2026, and most people only feel it after the damage is done. In Ohio, the cost of daily life is rising faster than the income many families depend on. Fixed income sources like Social Security are adjusted each year, but these changes are based on broad formulas that often lag behind real-world price jumps. This creates a slow erosion of buying power that happens month by month, not all at once. At first, it feels manageable. Then, it starts to squeeze. Here is the hidden mechanism at work. Inflation does not hit every expense equally. Essentials like food, housing, and healthcare often rise faster than the average inflation rate used for income adjustments. That means even if your income goes up slightly, your real costs may rise much more. Over time, this creates a gap where your money loses strength without you noticing immediately. Studies have shown that retirees can lose a significant portion of their purchasing power within just a few years under this pattern. It is not a sudden crash. It is a quiet drain. To stay ahead, you need to act with intention. Start by tracking your real monthly spending, not estimates. Look closely at where prices have increased the most. Then adjust your withdrawals or budget to match reality, not old habits. If possible, shift part of your savings into tax-advantaged or inflation-resistant options to protect value. Even small adjustments can slow the impact. Because in this environment, the biggest risk is not inflation itself. It is ignoring how fast it is changing your reality. If this made you pause, ask yourself, are you still in control of your financial future, or is the system quietly deciding for you? Share your thoughts or your story below, because your experience might help someone else see what they're missing. Before you leave, watch our previous video to stay one step ahead of these hidden changes and protect what matters most. We put hours of deep research and effort into every video. So subscribe to our channel. It is just one click, and stay informed, prepared, and in control. Number 8. Reduced state tax credits. There is a subtle shift happening in 2026 that many families in Ohio are only starting to notice. On the surface, nothing looks alarming. Tax forms still arrive. Refunds still come. But behind the scenes, key tax credits and exemptions are being reduced, adjusted, or phased out. These credits once acted like a safety cushion for people on fixed incomes. Now, that cushion is getting thinner. And when that support fades, the real cost of living becomes much heavier almost overnight. The hidden mechanism is simple but powerful. Tax credits lower what you owe after your income is calculated. When those credits shrink, your final tax bill increases, even if your income stays exactly the same. This creates a silent increase in financial pressure that many people do not see coming. It does not feel like a tax hike because rates may not change, but the outcome is the same. Research in public finance shows that reducing credits often impacts low and fixed income households the most because they rely on these offsets to stay stable. Without them, more income is exposed to taxation. To protect yourself, you need to become proactive, not reactive. First, review your latest tax return line by line and compare it to previous years. Look for credits that have decreased or disappeared. Next, speak with a tax professional or use trusted resources to identify lesser-known credits still available in 2026. Many people miss them simply because they are not obvious. Finally, adjust your financial plan to prepare for smaller refunds or higher payments. Because in this system, what you don't claim can quietly cost you the most. Number 7. Utility cost increases linked to taxes. There is a cost many families in Ohio are paying in 2026 without fully realizing why it keeps rising. It shows up in your monthly bills, electricity, gas, water. At first glance, it feels like normal inflation. But behind the scenes, tax-related policies and infrastructure funding are quietly driving these increases higher. For households on fixed income, this creates a steady drain that is hard to control because these are not optional expenses. You cannot simply stop using power or heating. The hidden mechanism works through layered costs. Utility companies often pass along expenses tied to grid upgrades, environmental compliance, and local taxes directly to consumers. These are not always labeled clearly, but they are built into your bill. Over time, this creates a compounding effect, where small increases stack into a major financial burden. Studies in energy economics show that utility costs can rise by 10% to 20% during periods of infrastructure transition, especially when combined with policy changes. The result is simple but harsh. Your monthly baseline cost of living rises, even if your lifestyle stays the same. To manage this pressure, you need to take control where you still can. Start by reviewing your utility bills in detail and look for patterns or sudden increases. Then invest in basic energy-efficient upgrades like LED lighting, insulation sealing, and smart thermostats. These small steps can lower usage without reducing comfort. Also, check for state and local assistance programs designed for fixed-income households. Many go unused each year. Because in this system, the real danger is not the size of one bill. It is the steady rise of all of them combined. Number 6. Healthcare cost pressure. There is a growing pressure point in 2026 that many families in Ohio feel, but struggle to explain. Healthcare costs are rising, but not always in obvious ways. You may not see a huge jump in one single bill. Instead, it appears in small increases, higher premiums, rising copays, new out-of-pocket limits. Over time, this creates a slow but relentless financial strain that quietly eats into fixed income. And because healthcare is not optional, these costs cannot be delayed or ignored. The hidden mechanism is tied to how healthcare systems are funded and adjusted. Changes in taxes and public funding can shift more cost responsibility onto individuals. At the same time, insurance structures evolve, often spreading costs across premiums and service fees. This leads to a layered increase where you pay more in multiple ways instead of one clear charge. Research shows that even modest annual increases can compound into a significant burden within just a few years, especially for older adults who require more frequent care. The system does not spike, it tightens slowly, making it harder to notice until it becomes overwhelming. To stay ahead, you need to act with awareness and precision. First, review your healthcare plan every single year, even if it feels repetitive. Small changes in coverage can have a big impact on total cost. Next, compare available plans and consider switching to options with lower premiums or better long-term value based on your needs. Also, ask providers about cost-saving alternatives for treatments and medications. Many options exist, but are not offered unless you ask. Because in this environment, the biggest risk is assuming your healthcare costs will stay predictable. They rarely do. Number 5. Migration trends driving cost shifts. There is a silent movement happening across Ohio in 2026, and it is reshaping local costs in ways many families do not expect. People are relocating, some moving in with higher incomes, others leaving due to rising expenses. At first, this seems like a normal population shift. But beneath the surface, these migration patterns are changing the financial balance of entire communities. When higher-income households move into certain areas, they bring spending power that can push local prices upward, affecting everything from housing to daily services. The hidden mechanism works through demand and perception. As more affluent buyers enter a neighborhood, home values begin to rise. Local governments then reassess property values, which increases taxes. At the same time, businesses adjust prices to match what new residents can afford. This creates a ripple effect where the cost of living climbs, even for those whose income has not changed. Studies in housing economics show that even moderate migration shifts can significantly impact local affordability within a short period. It is not just about who moves in, it is about how the system responds to them. To protect yourself, you need to stay alert to these patterns early. Start by tracking changes in your local housing market, not just your own property. Look at nearby sales and rising price trends. If you notice a steady increase, consider relocating within lower-cost areas before the shift spreads further. Also, connect with local community updates to understand upcoming developments that may attract new buyers. Because in this system, the biggest advantage goes to those who move before the market fully reacts, not after it becomes too expensive to stay. Number 4. Pension taxation changes. There is a quiet shift happening in 2026 that is directly affecting retirement stability in Ohio. Many people believe their pension income is predictable and secure. On the surface, that still feels true. The payments arrive on time. The amounts look the same. But what is changing is how that income is treated when it comes to taxes. And this creates a hidden reduction in what you actually get to keep each month, even if your pension itself does not decrease. The hidden mechanism lies in adjustments to tax rules, thresholds, and exemptions tied to retirement income. Small changes in these areas can shift more of your pension into taxable categories. This means a larger portion of your income is now exposed to taxation. It does not show up as a direct cut, which makes it harder to notice at first. But over time, it creates a steady decline in net income that quietly reshapes your financial reality. Research in retirement economics shows that even minor tax changes can significantly affect long-term income sustainability, especially for those relying on fixed payouts. To stay in control, you need to treat your pension like an active financial resource, not a passive one. Start by reviewing your after-tax income, not just your gross payments. This gives you a clear picture of what you truly have available. Next, explore ways to rebalance your income sources, such as adjusting withdrawals from other accounts to reduce your total tax exposure. If possible, consult a professional to identify smarter distribution strategies. Because in this system, what matters most is not how much you receive, it is how much you actually keep. Number 3. Hidden local tax increases. There is a layer of taxation in 2026 that many families in Ohio never fully see, yet they feel its impact every year. These are not the big, headline-grabbing tax changes. Instead, they come through local levies, school funding measures, and small municipal adjustments. Each one seems minor on its own, but together, they form a quiet system of increases that slowly raises your total tax burden without clear warning. This is why many people feel like their bills keep rising, even when major tax rates appear unchanged. The hidden mechanism is based on fragmentation. Local governments often introduce smaller taxes for specific needs: schools, emergency services, infrastructure. These are approved separately and added over time. Because they are divided into pieces, they are less noticeable to the average homeowner. But when combined, they create a compounding effect where your total obligation grows year after year. Research in public budgeting shows that fragmented tax systems can increase overall burden significantly while maintaining the illusion of stability. It is not one big change, it is many small ones working together. To stay ahead, you need to look beyond the surface. Start by breaking down your full property tax statement, line by line. Identify each levy and understand what you are actually paying for. Many people never take this step, which leaves them unaware of how much has changed over time. Next, stay informed about upcoming local votes or tax proposals in your area. These decisions directly affect your future costs. Because in this system, what you don't see clearly is often what costs you the most over time. Number 2. Housing market ripple effect. There is a chain reaction unfolding in 2026 across Ohio that many families only notice when it is too late. Housing prices are not rising in isolation. They are being pushed by taxes, migration, and shifting demand all at once. This creates a ripple effect, where one change in the system triggers multiple cost increases across the market. For someone on a fixed income, this means the cost of staying in the same home, or even renting nearby, can rise faster than expected. The hidden mechanism begins with higher property taxes and increased demand in certain areas. As ownership costs go up, landlords raise rents to maintain profit margins. At the same time, fewer affordable homes remain available, which pushes prices even higher. This creates a tightening cycle where both buyers and renters feel the pressure at the same time. Research in housing economics shows that when supply tightens and costs increase together, affordability drops quickly. It is not just about owning a home anymore. It is about the entire housing system becoming more expensive to exist within. To stay ahead of this shift, you need to act before the ripple fully spreads. Start by evaluating your current housing costs against your long-term income stability. If the gap is growing, consider downsizing or moving to a more affordable area early, before prices climb further. If you own a home, explore options to lock in stable, predictable costs, such as fixed-rate structures or reducing outstanding debt. Because in this environment, waiting too long can turn a manageable situation into one that forces urgent and difficult decisions. Number 1. Financial unsustainability threshold. There is a breaking point many families in Ohio are approaching in 2026, and it often arrives without warning. On the surface, everything still looks manageable. Bills are being paid. Life continues as usual. But underneath, a critical line is getting closer. This is the moment when essential expenses, housing, food, healthcare, utilities, start consuming most of a fixed income. When that share crosses a certain level, it creates a financial tipping point where staying becomes harder than leaving. And many people do not recognize this threshold until they are already past it. The hidden mechanism is based on accumulation, not a single event. Each increase, taxes, utilities, healthcare, adds pressure slowly. Alone, each cost feels manageable. Together, they create a compounding load that pushes total expenses beyond sustainable limits. Research in financial behavior shows that when essential costs exceed around 70% of total income, households face a high risk of financial instability. At this stage, even small, unexpected expenses can cause serious disruption. It is not about one big crisis. It is about many small pressures stacking up over time. To stay in control, you need to define your limits before the system defines them for you. Start by calculating your true monthly essentials and compare them directly to your fixed income. If that percentage is rising, take it seriously. Next, create a clear relocation or adjustment plan in advance, even if you hope you never use it. Identify lower-cost areas, reduce non-essential spending, and build a small financial buffer. Because in this system, the strongest position is not reacting when things break. It is acting before they do. What we are seeing in 2026 is not just a set of isolated changes in Ohio. It is a system-wide shift that is quietly redefining what it costs to live, stay, and feel secure. Each factor, property taxes, inflation, healthcare, and hidden local increases, may seem manageable on its own. But together, they form a connected pressure system that slowly reduces your financial freedom. This is how stability is lost, not in one moment, but over time. And for families on fixed income, this shift hits harder because income does not adjust fast enough to keep up. The real impact goes beyond numbers on a bill. It touches your sense of control, your long-term plans, and even your identity tied to where you live. When costs rise faster than income, choices begin to shrink. Things that once felt certain, staying in your home, maintaining your lifestyle, supporting your family, start to feel uncertain. This creates a new kind of financial stress that is not loud, but constant. Research shows that prolonged financial pressure can affect decision-making, health, and overall well-being. In simple terms, when your financial foundation weakens, everything built on top of it becomes less stable. But understanding this system gives you an advantage. When you can see how these forces connect, you are no longer reacting blindly. You can plan, adjust, and protect what matters most. Because in this environment, awareness is not just knowledge, it is leverage. And the people who recognize these patterns early are the ones who keep their options open, protect their resources, and maintain control over their future instead of being forced into difficult decisions later. If this made you pause, ask yourself, are you still in control of your financial future, or is the system quietly deciding for you? Share your thoughts or your story below, because your experience might help someone else see what they're missing. Before you leave, watch our previous video to stay one step ahead of these hidden changes and protect what matters most. We put hours of deep research and effort into every video. So subscribe to our channel. It is just one click and stay informed, prepared, and in control.